Hello, everyone. Welcome to Wine and Real Estate. I'm glad today to have Marcin Drozdz as a guest on my podcast, and we've been talking about it for months. We've tried a few times. I had to cancel, bad internet. Then, Marcin, you were in BC, and I think some forest fires or something was going on. And it's been very dramatic, but I think it's going to be really, really good. And I've attended Marcin's a few events that he's hosted about raising capital, and you'll be able to tell us a lot more. But I found some great value. I really enjoy what you taught, and I think a lot of people could benefit from your teachings. So could you introduce yourself? Give us a bit of an overview of where you're from, what you've done, and what you're up to these days.
Sure. Happy to do it. First of all, Francois, thanks for having me. It's it's been a journey. I mean, since COVID started, so many of us have had to reinvent how we live our lives, how we operate. Having been stuck like so many of your listeners at home, I was looking for other things that I could do with my time. I used to, pre-COVID, I used to be on flights 50, 75 times a year, looking
Wow.
at deals, meeting with investors. So there was a lot of time that all of a sudden I got back because of COVID. And at that time, a lot of my friends, colleagues were saying, okay, so, tell me about this. How does this work? And we ended up kind of backing into what's become now the M1 Inner Circle and the educational side. And, my background, I guess I'll start there. I started out in private equity when I was in my early 20s. Prior to that, I was buying houses, smaller little deals. And probably like so many of your listeners, I read a few books. Rich Dad Poor Dad really stuck out in my mind. And I'm reading about these $30,000, $45,000 two-bed, one bath, and I'm just like, and
Where
this was,
are they?
where are these things, right? But it was, it was early 2000s in Ontario, and you could still find markets where houses were relatively, especially compared to today, relatively cheap. And, I'm in my mid-teens, late teens, and I'm out there looking at deals, calling realtors, driving to meet with city officials, looking at city plans, and just trying to figure out how to do the real estate thing. Had some success, bought a few properties, and then I was lucky enough to get recruited by a private equity firm out west. And got proposed to work there. Didn't ask about the money. Didn't ask about perks. I didn't care. I just packed my stuff, got in my car, and just gone.
Nice.
I wanted the exposure, right? Because to me, I've spent money on courses and I've spent money on training and mentorship and coaching, and all that stuff's great. But if you can actually be in the trenches and do the stuff with people that are doing it, I mean, that there's just no replacement for that. So. Got really lucky to have that opportunity. Took the opportunity, raised tens of millions of dollars at that PE firm in equity for all kinds of different deals. We did land assembly, multifamily. We did commercial, just everything. But I think hospitality and industrial. So we did a lot of different things, and I got exposed to the deals, the structures, the legal, the accounting, it was just really cool. And I'm in my early 20s and I'm sitting in rooms, and I remember sitting there and I'm just making notes casually of words I've never heard before.
To look them up.
Yeah, because I'd go home and I'd start Googling these words to understand what things meant, because if you need to understand the words, you need to understand the context of what you're dealing with before you can actually dig into the content. Otherwise, everything is shiny everywhere.
Yeah, that's it.
Yeah, spent a few years doing that. Then had the good fortune to break out on my own, put together a few partnerships, a few LPs, a few mutual fund trusts, a few different entities, raise capital. Things worked, things didn't work. There's, you learn, you make mistakes, you get better. And, fast forward to today, I'm focused on multifamily, primarily in the United States in the Southeast.
Okay, that's excellent. Wow, quite a story. And I think I heard you had a new arrival in your family as well not long ago. So that's a big life change as well.
Yeah, I have a new boss at home. I now have two beautiful ladies are in charge of my day-to-day affairs. Can't figure out which one's more stubborn yet, but that's yet to be that's yet to be told. Yeah, thank you. No, we had a daughter 2 weeks ago.
Wow, congrats. That's a big game changer for sure.
Mhm.
And a future heir to all this empire you're building. So I'm sure it will become part or is become a part of your why as well, why you're doing all of this and buying and selling properties and well, mostly buying, I guess.
Yeah, I mean, I like the strategy of I think I've heard Jason Hartman say this down in the U.S. Refi till you die.
Yeah,
So you buy properties with the intention to refinance them perpetually and continue to buy more assets, and never really go out of your way to sell because as you and I both know, it's a lot of work to find a great opportunity. So why the heck would you sell it?
that's it. And when you sell, you're turning off the pipe, like the pipeline for this wealth building. You just have to find maybe you need to pivot the strategy depending on the size of property, of course. I mean, if you have 120 apartments, you can't turn them into Airbnb, but if it's a smaller place, you can add maybe some income streams and well, larger units as well. You can add things like what are you doing, Marcin, to increase value usually?
So the last two buildings we bought were heavy value adds. One was 82 townhouses, one was 178 apartments. And in Memphis, Tennessee, down in the southeast there, we paid low 20s, mid 20s a door, I think.
Wow.
I mean, you can't fix your kitchen for what I paid for these apartments, and you're getting entire apartments for that price.
Wow.
So what we're doing is these two in particular are very heavy value adds. Most of a, a substantial portion of both of these properties is down to the studs repairs.
Mm.
Some of them are classic units that you can renovate. Just really regentrify the area. There's a lot of opportunities still, even in this market in 2021 and beyond, where there's this massive demand of rental housing because people are either priced out of the market, they can't afford to buy, or they don't want to pay the higher end rents to have things like a pool or all the other amenities or marble countertops. They'd rather save 300, 400, 500 bucks a month and just have a clean, safe, and affordable place to live. And yeah, we go into markets where you can do that, and at the same time, you're regentrifying the area, you're increasing the tax base, and you're creating a tremendous opportunity for your investors. So
Yeah, that's excellent. I mean, there's so many places, like you said, that need clean and affordable housing. It is a big problem in Canada because the demand is so high. Is it the same in the United States, like in the
Oh, well, Francois, I think it's consistent across North America. It's funny. I was reading a report yesterday. It talked about affordability on a worldwide scales, and I'll
yeah,
forward this report to you. I don't remember. It was from a credible source. I remember, but the way it defined affordability is it took the median wages of an average family in a certain major market, and it divided how many times you needed to divide the family's income into the price of a house. And
mm,
obviously, the more times it divides, the more expensive it is. So, for example, if a family makes $50,000 as a family and a house is $150,000 or less, that's affordable because it's three times.
the
Four times,
salary. Yeah,
yeah, four
that's
times.
not the case anymore here.
Yeah, I mean, even in the GTA Toronto, even if a family makes 100,000 as a family, which is considered pretty good for most average, incomes,
Yeah,
that's 100,000. So you're not going to get a house, let alone a condo for 300,000.
no,
And and what that means is, as you and I very well know, is the higher the multiple is, the harder it is for people to afford to buy. So they need to rent, and that division of people that are being pushed into the rental side of the equation is much higher than it's ever been before because of the affordability. So, yeah, there's tremendous demand for sure. Canada, U.S., and unfortunately, I think the rental demand is only going to increase.
absolutely. Well, the culture is changing. Like we're more and
Mhm.
more homeowners, but yeah, I've read a few reports as well. The middle class is kind of a blip in time, and it's being pushed out either up or down, and that's what's happening. So, but it's very smart to be buying those apartments that are affordable to most people. That way, you're kind of recession proof. You're not in the high end rentals with heated floors and, like you said, granite and indoor pool. You have something that everybody, well, most people can afford. So some people might go downgrade, and some people are upgrading to your units. So it's a great model.
Yeah, well, and I mean, regardless of, and I have these debates almost daily. You know, what's going to happen with interest rates? What's the Fed going to do? What's the Canadian government going to do? You know, what about this? What about that? What about inflation? What about all these things? And I just think to myself, I go, look, practically speaking, I'm never the guy that's going to go invest in a high flying market. I'm not the guy that's going to go chase tourism or hospitality, or there's this one employer that's opening up shop here, so let's all pile on there. Like,
Yeah.
that's not me. I've always, if you look at any of the markets I've invested, you know, in Canada, I remember I'm still bullish on, you know, central Canada, Winnipeg. There's markets there, and I always liked. So Winnipeg is an example. I loved Winnipeg because if you look at the pie chart of the employers, it's just so many different,
Diversified.
so diversified.
Hmm.
Exactly. And I love that because people have jobs, people go to work, people will continue to be able to afford to live there. You're not going to have breakout years, you know, notwithstanding COVID, but I look for that discipline throughout the US. So, you know, for me, Memphis was huge because, again, very diversified logistics, healthcare, all the different employers. There's markets all throughout the US that have that type of mentality. And to your point, as you have, you know, more people end up in the rental side of the equation, they're always going to prioritize clean, safe, and affordable housing
That's
in
it. That's
places where there's jobs.
non-negotiable.
Yeah, in places where there's jobs, as long
Yeah.
as there's an opportunity to go to work, you need a place to live,
Yeah.
and that's really all there is to it.
Yeah, and a lot of American cities, like I invest in Detroit and
Mhm.
other cities, they've seen the center empty out, but now work is coming back to the core. There's a lot of well, various economies and things
Yeah.
happening, and those areas are a lot more affordable. It's the opposite of Canada. Most downtowns in Canada are very expensive. In the US, a lot of cities, it's the opposite. The downtowns
Yeah, you're right.
and
Actually, I never thought about it that way, but you're totally right. And the thing that makes those inner city plays, especially in coming back into the U.S. now, so much more viable, is that if you look at the replacement cost of all of that infrastructure, it's insane. I mean, you know, it
yeah.
gets back to the inflation conversation, right? Like, so they're regentrifying all these older buildings and neighborhoods because why not? That money's already been spent to build the roads, build the infrastructure, get the sewage there, get the electricity in place, the buildings there. Maybe the buildings reusable outside of the interior, right? So
Yeah.
there's so many reasons to look at that for sure.
And parks and it's just for the environment, it's much better to build a more compact city or
Hmm.
and do infill like we're seeing a lot in Canada, a lot of infills in the States. They have a lot more filling to do in the middle in some cities like Buffalo
Yeah.
and other very depressed cities. But Memphis, was it ever like Detroit, like not as bad as Detroit, but kind of abandoned in the core or not? Or
Well, yeah, Memphis as well had an issue where they really pushed, and I don't want to speak on behalf of the city planners, but from what I can tell, is that they really had a push for apartments, and they had this sprawl. I think it was back in the was it between the 70s and the 80s maybe, where they really started pushing further out. And what ended up happening is there was a little bit of a decaying in the center or near the
okay.
center, where a lot of these larger multifamily projects, people started leaving these areas, you know, for the burbs and, you know, the white picket fence and all this stuff, because people improved their economic circumstances. And then to your point, it left this deteriorating interior, which now has to get backfilled because there's no housing.
Yeah, like it's been vacant lots and
Hmm.
or you're buying dated buildings with maybe condemned units or
Oh yeah, oh
stuff
yeah.
that's really not habitable. So
Francois, there was a building we put an offer on. We were negotiating. It was almost 200 doors. It was earlier this year, or late, yeah, earlier this year. It was almost 200 doors. And as we were negotiating, the city came in and condemned, I think, half of the units
Oh
because
my
of
goodness.
mold and mildew. We knew the mold and mildew was,
Yeah.
we knew some mold and mildew was there, but the city, I don't know how they just went in there and they condemned the building. It was just, so yeah, and this isn't a one-off. There are tons of these buildings that were built in the 70s or 80s vintage where they're in a terrible state of disrepair, and some of them aren't worth rehabilitating just because they're so far gone.
Yes.
But we try to pick through the find the needle in the haystack and find those that still have good bones and you can bring back to market. Another property I'll share this quickly with you was 80 doors or 85 door, 80 something doors, and we put an offer on it. We're in due diligence, and it was odd to me that the seller of the property had only owned it for a couple of months and he'd paid cash. So I'm like, why are you selling? Just so and obviously not offering anything. So we spent a couple $100 to check the sewage lines. Well, wouldn't you know it, the sewage line was cracked to the city.
Oh.
So, that would have been a couple $100,000 easily to fix.
Wow. So that's
Right.
why they're selling it.
Well, I think what happened is they bought it cash. They never checked the lines. And then when they bought, because when somebody buys something without financing, you don't have the benefit of the bank's forced due diligence, so to speak, right? Because a bank will force you to do certain things before they lend on the property.
Absolutely.
Be it environmentals or all these different things. So when somebody buys something cash and then they're inclined to sell it 3 or 6 months later, that kind of makes me ask more questions.
Yeah.
And sure enough, he bought it cash, never checked didn't do his underwriting. I guess it's up to him or her to do it the way they want to. It's their money. But that they probably then wanted to start fixing the property, and they realized, well, sure enough, you got this liability here.
Wow, and that's a big one. I mean, that's important. You were talking about rehabbing units, but now this is way above and beyond just
that's the worst, because nobody is going to give you any value for that, Francois.
They don't care. Like, just make it work and that's it. Who cares?
I don't care. There's certain things that add no value but are required.
Yeah, like a roof,
parking lot, running water. There's certain things that nobody gives you any value for because it's expected to be there.
Yeah. So how do you help people or investors through your program kind of sift through all that? Like how do you evaluate a building? Is it too far gone, or is there still enough? Like, what are good bones? Of course, the structure. But now you mentioned the like sewage and all that. Like, what else do you look at?
Well, I mean, there's plenty of people out there that provide great education on underwriting and looking at properties, and I'm sure you and I know a lot of the same people. Where I really enjoy mentoring and educating is on the capital side, because for me, it seemed odd to me that there was very limited resources in this space for people that are trying to figure out how to scale. And I don't mean, there's ways out there. You can do vendor take-back mortgages. You can do a few things here and there. But ultimately, if you're going to scale the business in any meaningful long-term way, you're going to need equity.
Well, that's it. Yeah. The VTB, it's kind of marginal and it's not all markets. And
VTBs are fantastic. I've used VTBs. They're great. It's a great way to reduce the amount of equity you need. But ultimately,
you still need money.
You still need money. You're going to need money. As good as we've been in what we do, I can't tell you that we're buying 100, 200 door buildings with no money. It just doesn't work that way, right? So learning how to put together the equity, learning how to structure the deal, learning how to properly position things to investors, that's one of the things that I really kind of get excited about. I mean, there's a lot of rules around raising money. I'm not a lawyer. I'm not the guy that's going to legally tell you how to do things. That your securities lawyer, U.S., Canada will do that for you. But the things that they won't tell you to do is how to create demand, how to create scarcity, how to show people that the deal makes sense in a way that they can understand it. These are some of the things that I really enjoy doing. And yeah, we host. We have usually it's monthly. Sometimes it's bi-monthly. We do an event called the Mastermind, how to raise capital, and we have. I forget what the cost is, but any of your members, any of the
Very
people,
affordable.
yeah, any of the members, any of the people listening to your podcasts, we have coupon codes and all. The event for me is fun. I enjoy it. And, we usually have between 100 and 200 people registered, and, we have a lot of fun with it. So,
Yeah, and I've had the chance to attend, and I've made some great contacts. And as you know, I'm in Ottawa, so there's actually a few people from Ottawa we've met in person after
oh,
the
great.
event. Yeah, so there's really a community building around it, which is great. And I think it's really important, as you mentioned, to scale. So what you do, in essence, is really syndication, if I'm correct. You're pooling resources.
Yeah. I mean, the level that we operate on when we're buying, 100, 200, 300 unit buildings, then yeah, we're definitely syndicating. I mean, in addition to the GP, the general partners contributing some of the equity required, we rely heavily on the LPs.
Yeah.
Sometimes the raises are a couple $1 million, and the buildings are tens of millions of dollars. So it's all relative. And what it does is it gives people the framework that we use at that level that they can take down and apply to a level of, hey, you know what? I'm just trying to buy a fourplex. I'm just trying to buy two. I'm just trying to buy an 18 unit building in XYZ city. So, one of I'll share this with you. One of the concepts that we share is called the EASY system. And EASY stands for EASY, exclusive, abundant, scarce, and your allocation. So as an example, Francois, most people, when they call people for a commitment, they're just stumbling and they're all over the place and
They're all
just
nervous.
nervous and talking themselves into circles and are almost shy to request or ask for the commitment. So
Yeah.
the system that I created, so the E exclusive is you would simply just go into what's exclusive about the opportunity. So, we're buying 178 units, we're paying X per door. The value in the area is Y per door. The market is growing by X. Here's what it would cost you. Like, just what is exclusive about your opportunity?
Yeah.
It's really important. You have to be able to do that in 30 seconds, because as excited as you are to talk about the compressing cap rates and the loan to cost or loan to replacement or all this different stuff, your investors don't care. Like,
No.
some do, but trust me, most really don't. They're trying to understand it from their world. So exclusive, 30 seconds. What makes your deal unique, exclusive? Abundant is the A. So abundance, it's important that you have a lot of people to talk to on the investment side.
Yes.
You can't have one person or a handful of people that you're relying on for every single deal, because that becomes, I mean, in the institutional world, that becomes a power play, and it's not in your favor because you're too reliant on one source of funding. So you have to make sure that your investors understand that you have an abundance of people to talk to.
Yeah.
As scarcity, the opportunity, if it's an exclusive opportunity, you've got an abundance of people to talk to, you have a truly scarce opportunity for them to participate in XYZ. It's important that you make that clear to them. And then Y is your allocation. So in other words, Mr. Prospect, if this opportunity checks your boxes for due diligence, what kind of allocation would you be looking at? Now, I'm oversimplifying this, as I know, because this is a pretty extensive training that we go into, but it gives you a framework to at least start from, so you don't get on the phone and go, because people, you got to make it easy for them, and they have to, and you always have to leave the environment better than you found it. So if you create a toxic or awkward conversation with somebody, I mean, you're done. You're not going to go back to them.
No, and that's how they respond. And it's so important to cultivate those leads, and you get to know what what they're looking for and all
Yeah.
that. So this is important. Great points. I love the easy. How did you say it? Easy.
Oh, it's the easy system.
Easy
Yeah.
system. Yeah, it's so true. I get calls and people asking me all the time, "Oh, I need money for a project." Well, do you have a network? Have you been building that network? And I always talk about a sales funnel. I was in sales for many years. So
Mhm.
what you're describing very much sounds like a sales funnel. You have an abundance of people and you may have an abundance of projects, and then you kind of connect the people to the projects because you end up knowing them. Marcin, do you have some sort of CRM, or how do you keep track of all these people, like those contacts? And
Yeah, I mean, we have for our purposes, we have a few different CRMs. We obviously have one for the real estate investor business where we're training real estate investors, which is what you and I are talking about. And then we have continuity programs for our existing investors that are part of previous transactions, whether it's quarterly updates or annual financials. You do appreciation events. So you're right, Francois, there are systems and processes, and it is incredibly important to have that if you want to scale, because guess what, you're not going to be able to do it all. You can't.
no,
And if you want to, that's okay, but you're going to hit a wall at 5 or 10 doors. And if that's all you want to do, then that's okay, but to
that's
go
it.
beyond that, then you need to have those systems. And feeding into those systems, you have to have a replicable way to continue to nurture those conversations.
Exactly. I was just talking with my wife. We're like, oh, our investment partner, are we giving them Christmas gifts and different things? So it's important. I know this is very small scale. Like I don't do the size of deals you do, but just maintaining relationships. I often go and have dinner with certain partners, like
Mm.
building that network. And then those people actually end up calling you, hey, do you have another deal? So I'm sure the same happens to you. And you just kind of mentioned it there, like what's next, and you keep showing them more deals, and they know where to put their money in the future. So.
Yeah, and you know what? It's not complicated. I mean, I know some people, even myself, when I first started out, I thought it was a lot more complicated and elaborate than it was. Like, what do you do for your investors? Do you buy them stuff? Do you take them to hockey games? Like, how do you do it? What do you do? And honestly, I've been at this for 15 years. It's the little things that make all the difference.
Yeah,
It's not the big elaborate, shows of, wealth or extravagance. It's the little things. Like, I remember I had one investor who's really passionate about fishing, right? He was telling me he was having an off time. He wasn't catching any fish. So remember that game with the fishing, with the little fish that open and close their mouth with a magnet? The little
yeah,
thing that goes in a circle, like the little toy thing. So
yes.
I bought him one of those and I mailed it to him. And I said to him, I said, here's something to help you get your fishing game back on track. And he was just laughing.
Yeah, you just thought about him. Yeah, and it's so
It was
true.
just silly. It was a $3 thing at the dollar store. I was walking by, I saw it, I laughed, I picked it up, put it in an express post, sent it to him. He laughed. It's just, and I would do that for any of my friends as well. Like, it's not like I was trying to it's not like I sent him that and then I called him the next day and said, hey, by the way, I have this deal. Like, it's just you just build rapport with these people. Like, you eventually get to a point where they call you and they're like, hey, what are you working on?
Yeah, well, that's it. It's all about relationships.
Yeah.
Yes, money, of course, but it's the relationship and the value you bring. So this is huge, and that's why people call you, because they've seen now your track record, and that's excellent. Great. Well,
And you build that familiarity, because look, it's only a matter of time before something doesn't work the way you thought it would. It
yeah,
happens to all of us, me included. If you're in this business long enough, it's going to happen. Deals won't go the way you thought they would. Things will happen. But if you're always coming from a good place and you're genuine in your approach and you're sincere and you're communicating, then you'll work your way through it, whatever it is. And then when things happen really well, then it's just you're never as smart as you think you are when things are going well, and you're never as dumb as you feel when
no.
things aren't going well. So it's just having that consistency is very important.
Yeah, key marketing words there, consistency.
Mhm.
It's important, and in relationships and everything we do. So,
Yeah.
Marcin, if people want to get started with you, what's the best way to get a hold of you or connect with you?
Sure. I mean, I recommend they go to the website, marcindrozdz.com. They can see some of the events. They've got some free resources there that they can download, sign up. We've got a newsletter that we put out as well. We do lots of stuff for free or near free, just to help people kind of get familiar with what we do and make sure they like it. We have an inner circle where we have a paid membership where we drill for skill on a weekly basis and just really
Cool.
make sure that people are in tune. I can't tell you how many millions of dollars our students have raised so far, but it's probably a lot, and it's just little tweaks, right? So
That's excellent. And do you have a final word of advice, something you really want to share?
uh, yeah, have more than one kid.
Yes. No, it's so important. If you can, I mean, I have two, and it's important to have
Yeah,
more than one, because otherwise you'll spoil them to death. That's probably
yeah.
what you're gonna stay there.
Well, that, and eventually, I want the older one to look after the younger one too, right? So,
Yes. Mine are at the age where my son, drive your sister there, drive your sister here, drive her there.
really,
Perfect.
you don't
Yes.
look old enough to have kids that can drive. That's
Oh,
impressive.
I'm 41. My son's gonna be 18 in in a month and a half now. So
Wow, well
yeah.
done.
Thank you very much. So it's been a pleasure.
Yeah,
And yes, thank you. And let's stay in touch and see what's next.
sounds good. Thanks, Francois.